Welcome back to the Eric Krown crypto channel. Wishing you a happy and healthy start to this nice macro Sunday morning over here, as we're going to be looking at some very, very high term timeframes. Also, very briefly cover the low term timeframes as well, which is more or less the same as yesterday. And of course, with CME open up later tonight, there is much to discuss. So the setup in the new place continues to get absolutely even more crazy. It's like the place gets even messier as days go on. So again, I do need to let you know that if you are trying to contact us, response times might be a little bit limited over the next day to 3 days, something like that, because we are still setting up here in the new humble abode. So with that in mind, I should now just get right into the actual price action analysis. Let's start off with the lower term time frames today. Again, same thing as yesterday, still looking at range resolutions in this case from the same criteria. This is CME, by the way, which opens up a little bit later tonight, and a range resolution short term with any sort of a 4-hour closure above 19,750, and I would still be looking for a move somewhere back around that $20,500 high. If you see any sort of a move with a tick above the 27th of September high, which is 20,400, then I would actually extend that target all the way up another $1,000 or so, somewhere around here. But on the same token, perhaps a little bit more relevant for right now, as I get rid of the unnecessary drawings for this particular time frame, is this. If we do see a break below the bottom side of this range, then that is not just short-term or medium-term time frame break. That is going to be a higher-term time frame break. So I'd be judging this on a higher-term time frame closure, that being at no less than a 12-hour, preferably even a daily. Any sort of a closure below the bottom side of the range, which is 18,100, then yes, I would be looking for the next big markdown phase. We're talking about big moves into, probably the $16,000 territory, maybe even $15,000 territory. Now, keep that number in mind, because there are going to be some more interesting ways kind of govern this. But for right now, let's actually go into a couple big things that I actually don't think I've spoken about, or at least spoken about recently on this channel. First and foremost, we have a big CME volatility versus stochastic momentum signal building up right here. I actually won't go into detail on this particular one, but I will say that it did precipitate the last two major moves that you can see right here, and so on and so forth over the past year. I've actually gone all the way back throughout the full history of CME to document them. It's a really powerful one, but because CME is not trading today, I don't really have anything specific to be bringing up on this. What I do have, however, is the 5-day signal, the 5-day and the 2-day signal. The 2-day one was resolved last night, or sorry, I got another closure last night, but the 5 days having its closure tonight, so it's the most relevant, as it is also a higher term time frame. So first and foremost, what is the signal? It is a volatility, which is represented by this indicator here, BBWP, versus stochastic momentum. First things first, when volatility gets to 15 percentile or lower, I define that as extreme lows on the 5-day time frame. If we go back throughout the past 4 years, we can observe that when it gets this low, the average move produced from the volatility expansion has been about 42.35%. Takes about 37 days for it to occur on average. And if we were to go off the first deviation, that would give us a range between 35.25% all the way up to 49.5%. What's very interesting about this one is that over the past 4 years, the stochastic oscillator has actually been perfect in getting the overall direction for the volatility expansion. In this case, it's going to maintain its composure within that direction, just because, well, it did call the rejection from $25,000 all the way down to this $18,000 low thus far. But here's the thing, with it closing tonight, we have a chance to, just like the 2-day yesterday night, if that's not confusing enough, to start to resolve this signal, if you will. What is the momentum pivot on the 5-day? It is 19,160. So that means that if Bitcoin closes below that level tonight, downwards pressure resumes and risk remains to the downside. Still looking at those numbers, which we can apply soon enough here. On the opposite side, if Bitcoin closes above this, it'll be just like the 2-day. It'll be a good indication that, hey, we're starting to see this signal start to wane in strength. So we need to see 2 consecutive closures maintaining that before calling it kaputs there. Otherwise, you can run into these issues like we had more recently in early September, where it was hinting at it for 1 closure and then boom, just straight fucking down after that. Anyways, if we were to apply these stats as they are, well, first and foremost, the rejection thus far from $25,000 to our current low has been about a 25.25% move, which is, very, very, reasonable, obviously, but that is not within the context of the bottom side of the first standard deviation, which is where we expect 68% of the results to fall between. It is certainly within the context of the second standard deviation, which is where we expect 95% of the results to kind of fall between. So, if we are going to see the next range resolution to the downside, in this case, that's when I'm talking about the daily closure below this region, or even just closing below this pivot again tonight, I would still say that probabilistically speaking, statistically speaking, it's wise to be looking potentially lower. And if we were to drag it out for another 10% or so, because that would be 35%, that would put Bitcoin in about the mid to low $16,000 territory. If we were to go to 49.5%, it's obviously going to be much lower than that. So you can just kind of do the mental math in your head, but somewhere around like $12,500 from the signal given. So in this case right here, again, big closure tonight, 7 p.m. Eastern time, any sort of a closure below 19,150 essentially, and pressure resumes to the downside. If it closes above, that'd be another good indication that perhaps we might be seeing a bounce here first before anything else. Bounce, again, not the same thing as reversal. All right, sweet. So now that we've gotten through that, I do want to also address that the weekly, I'm getting ahead of myself right here. The weekly CME closure has actually closed above the stochastic momentum pivot. We need to see that again close above. And if it does, coming into next week, then we'd actually have some regular bullish divergence on the weekly stochastic. Also, not that it's my favorite one to measure divergence, but coming into next week, if that were to be confirmed, that would be a really good indication to myself that, hey, we're probably looking for this bounce to bounce first, and probably a significant bounce before anything else, potentially still lower over a longer period of time. Okay, I just lost my train of thought, but there's also one other thing that I wanted to address on the 5-day chart. The average days taken, 37. This is actually also what I'd really want to bring into the focus here, because from the signal given, which was basically mid-August, we are now working on day number 50 today. So this signal is very mature. Can it go on for longer? Have we seen it go on for longer than that in the past? Yeah, we have. We have seen signals as long as 50 days. Actually, that was a humongous one to the downside in December, from like $58,000 all the way down to $33,500. And other than that, I'm trying to search for other longer ones and not really seeing it actually. So this is starting to become, outlier territory here, which makes me consider that, hey, if you do start to see it close above that pivot tonight, probably going to see the next one follow through. Again, probably not the same thing. This is just personal opinion. I don't have stats on this, but that would just be my personal opinion, because if you do start to see that, happen, you have to start thinking, okay, well, this is starting to really get far out there in terms of days, and it's maintained above the momentum pivot for one closure. Probably have seen the signal, and again, 25%, pretty fucking good, at least in my opinion. And of course, with this looming overhead over here, that would be the signal for a pretty decent bounce sometime, later, not December, October, probably even into November as well. All right, sweet. So now that we've gotten that, I want to get to the monthly here. I'll start to address some of the higher term timeframes. So first and foremost, the monthly stochastic oscillator. We got a new tick on this one coming into this month of October, obviously, and it still maintains its downside composure here. The momentum pivot is 26,400, but why is this even, relevant to begin with? Well, all macro rallies and macro bottoms actually have been met with the monthly stochastic turning up above the 50 read. So I'll just put on my drawing tools right here. I marked them all off. You can see for yourself over here. There you go. And so again, pretty fucking good actually in terms of timing the momentum and the bottoms as Bitcoin shifts to the upside. And in this case, we are actually now seeing even lower monthly momentum than what we saw on the 2019 lows, the 2015 lows, and even the 2012 lows as well. So it's kind of within that same context, of these regions. And if it were to turn up from these regions, it would technically be, actually, no, it would not be hidden bullish divergence. Well, I mean, we kind of are making higher lows, but I would not call it that way. I want to see my hidden bullish divergence like somewhere around the neutral zone, basically. But in this case, what does it mean? Well, what does it all mean? I don't know. It means maybe nothing. But in this case here, it's kind of, it's around those prior bottoming regions. But as long as it is still angled to the downside, again, we've never seen a macro low with that condition still present. So what would actually be required as far as price action for October in order to force it back up? Well, a closure above 26,400 by end of month here. And then yes, we would see it cross the upside. It would also be in the same vicinity of those prior major lows. And if Bitcoin were to trade towards that region, 26,400, that would naturally imply a trade above the last month's high, even the whole consolidation that we've seen throughout the summer months, which was 25,200. And at that point, I would say that you're very likely going to see another $3,000 to $4,000 rip, somewhere around 29,000 to maybe even low 30s, like 31-ish, let's say. So as of right now, you can kind of see a way forwards if things were to bounce. If you see Bitcoin even trade back above last month's high, which is 22,800, that would be a really good indication. And again, it all kind of starts on the lower term timeframes over here. First, a closure above that 19,750 region, and then I'm starting to look for bounces. Personally speaking, in the short term, I do think Bitcoin's probably going to test the bottom side of this short term range yet again, just for what it's worth. But in this case over here, that doesn't necessarily mean it's going to be a breakdown, just a test of the bottoms of the range. And then if you see another bounce, and then that bounce gets above those critical areas, and then you can start to see the domino effect downstream. Anyways, moving on now to the quarterly here. Let's update on this. So the quarterly obviously closed at the end of September. And what do we have? We have a little bit of a, do you want to call this an inverted hammer dildo? Do you want to call it a upside down Jesus Christ dildo? It's a doji at the end of the day. And what do these typically signal? Indecision, so I'll sometimes see reversal off these as well. In this case, I don't put too much weight on it, but obviously if it were to trade above the last quarterly high, you can very easily see there's going to be a nice rip, probably into the shallow 30s. I would say 30,000 to 33,000 bucks. Also, if Bitcoin were to trade above the prior high, it would do something very interesting over here. It would confirm hidden bullish divergence of 3-drive variety on the quarterly. See 1, 2, 3 right there. I don't really have it drawn in perfectly, but you get the idea. And you can also see that this trend line defining this potential hidden bullish divergence has gotten the last couple lows as well on the macro scale, as marked them off right here. So that would potentially even be a bigger indication for a rally even much higher, maybe even all the way back to where this sort of massive girthy red dildo party got started, the point of release over there, to reference some to basically, well, maybe not all the way up, but deep 30s, something like that. You could definitely see that. So that's kind of the hopium that I have for right now. Let's now maybe get into a little bit more hopium. Okay, I got a little bit more hopium. Let's go check out Dixie. So Dixie, I do believe, has found a local high here. Now, local high is not the same thing as a macro reversal. I'll just put it bluntly, I'm still massively fucking bullish on this long term. Now, long term on a quarterly chart, we're talking about the year is out, right? 2, 3, maybe even 4 years out. But in the short term, relative to that on the weekly, we do have, a bit of a rejection right here. We're coming off of, some macro levels. Obviously, we're talking about the breakdowns that we did see all the way back from here on this release that you did see like way back in 2002 actually. And so, a bit of a local high likely within this region. It would also confirm, dare I say again, regular bearish divergence of a couple, actually 3 drives variety right there as well. And we probably see Dixie come back down somewhere around like, 108, 107, I think would be extremely likely, maybe even a little bit lower than that if things get really crazy to 104.5. So would that generally benefit risk assets? Technically, yes, but here's the thing. It's not a direct correlation between these two. What a lot of people get wrong about Dixie is that Dixie is representing the dollar's value versus a basket of other fiat currencies. It's not just like the dollar versus assets. That's obviously what you trade in like the stock market, duh. But does kind of give us a somewhat interesting indication, especially with the Fed meeting tomorrow. It's an emergency meeting. It's not really an emergency meeting. These things happen quite often. But could we see some fun stuff based off of that? Perhaps yes. So how would you confirm regular bearish divergence here? Just need to close below the last week's low for this following week or the week after that. Something like that would work in this case. And also keep in mind that we have met 2 extremes here on weekly BBWP. So, around those times, I'm typically looking for highs. But again, long term, there is nothing in my opinion at all whatsoever bearish about the quarterly chart here. So again, You know, could that align with like short-term rallies to, you know, sometime into the end of this year? Perhaps, yeah. But well, long term, I still remain with my 120 plus targets, maybe even more over time. I mean, this is just fucking crazy right here. Well, it's not crazy, but you know, it is what it is. It's strong is what I should say. All right, cool. So now let's get into some other stuff that, you know, we haven't really spoken too much about on this channel. I actually want to reference something that I think very few people follow, or at least from what I see on the social media amazing places of all time. You know, people typically talk about SPY or E-mini futures. They sometimes talk about NAS futures. The one that I really like actually is going to be NWA. Different thing. I'll say obviously that acronym here, but I'm talking about the NYA, which is the New York Stock Exchange composite. What is that basically? Just measures the performance of all common stocks on New York Stock Exchange. Anyways, this one is might as well call this free fall. Extremely likely we see this come down to 12,500. You know, it's not going to be in like the next day or two, but over the next, I don't know, 3 to 6 months, I'd guess. And that's kind of the next major area where I'd be looking for potential major lows. But with this one kind of in free fall, you know, it's very difficult for me to see the stock markets bottoming here for right now. Monthly, obviously close below the 50. I mean, this is continuation, like quite literally. If we go over to Nasdaq, you'll notice that it looks a little bit stronger in relationship to that. Again, you know, short term doesn't try for a bounce here. I mean, you are on the weekly, or you're a little bit below the weekly 200 simple. In my experience, it's just, I don't like getting super bearish into a region like that. You know, the first test, very likely going to bounce over here. Second test, a little bit less likely, but still high probability. Third test, lot less. Fourth test, it's like you're catching knives for spliv. But in this case, we do see a phantom drive of hidden bearish divergence on that last rejection. You know, I have to remain overall bearish on this. I think the quarterly kind of says it all here as well. Very likely going to come down further. And again, I kind of maintain my, it's not that I kind of maintain, I maintain the sort of idea, or at least it makes sense to me, and maybe you as well, that, you know, what essentially did we witness since like March 2020, which was the old Rona times? Well, what we witnessed was a liquidity bubble as the Fed basically wanted to support markets so that, you know, I guess things wouldn't get too bad in the short term. And they started printing a shit ton of money by, you know, just providing a shit ton of liquidity towards markets. It was absolutely insane. You know, did they do the right thing or not the right thing? That's not for me to comment on. I don't fucking know, man. I'm no macroeconomist, nor do I want to be. And I think most macroeconomics is bullshit. To be quite blunt. You know, obviously, economics does matter, but as the old saying goes from Nicholas Taleb, it's easier to macro bullshit than micro bullshit. So always keep that in mind. Anyways, in this case, obviously it had not hidden, but regular bearish divergence right here on the quarterly. And so what am I looking at? Well, I'm looking at a major top, and very likely going to at least trade down here over the next 3 months towards 10,500. And then if we are going to go with the sort of idea that I have, or at least if I'm going to explain my idea properly, the liquidity bubble started in March 2020 when the Fed just started printing and started going crazy. And so it would make sense to me, as the Fed wants to deliberately unravel what happened in the last couple of years. I mean, that's literally their sort of words. Then we'd kind of expect things to probably come back down around those bases that we saw from the 2020 saga, which would be where? Which would be literally all the way over here, where my cursor is currently at right now. So while things have, you know, certainly come down quite a fair bit already, it is a bit of a sombering detail when we do realize that it's still, you know, it's probably like 50% higher than what we saw over there. Yeah, actually 47% higher than what we saw in March 2020, which is just, you know, wild. So to me, that kind of makes sense. I don't know, maybe see things even lower. I don't fucking know, but I want to take things one leg at a time, obviously here. But for right now, you know, I still have no real reason to be calling lows in any markets just yet. The macro lows, that is. I think we're getting closer, obviously, like naturally, obviously with each and every passing moment, it's getting closer. But you know, I'm just still not getting the indications that I want to be seeing on the macro scale, which yes, they will be lagging probably by a month, maybe even 2 months. Before calling major macro lows. Again, doesn't mean that things can't bounce in the interim. They certainly can and very likely will, but I do want to be aware of these things first and foremost. So I think that's going to do it for today's video. A little bit on the longer side, but I did want to address these things, particularly with NYA. Almost did it again, and NQ. I thought that those were rather interesting. And then for Bitcoin, I think that one's a little more streamlined there. So tomorrow we'll cover the signal in detail because it's a really, really big one. And then other than that, I want to really have a moment to appreciate the feedback that I've been getting on the new quant project over here. It's really, really cool to see that a lot of people have been, or the people who have taken it, because it's really not that many to be fair, are, taking it in and having good results with it, which, that's the purpose. That's the purpose. And of course, you can take all the information in there and just use it for yourself anyways. You can always make small little optimizations. In fact, I really implore you to do that because you can actually make those strategies even more effective, particularly with the risk management. But I kind of had to do a streamlined version of that for this program so that, the average educated person could do it. All right, sweet. Nice. I think that's it for today. I want to be wishing you the best. I'm going to continue to set up this new cave place. So I will be very, very busy for the next 24 hours, probably the next 36 to 48 hours. And with that said, much love, take care, and see you hopefully soon.